big story today is Bitcoin's decline, 10% over the last 5 days. Big drop down yesterday, 26,000. And you got a lot of people chatting, wondering, why did Bitcoin go down? Why did Bitcoin go down? The initial report around 5:30 was that SpaceX and Elon Musk was dumping hundreds of millions of dollars in this, and that triggered a bloodbath across the futures and spot market. Okay, that's not what happened. If you've been following me and you've been paying attention to what we do here, we follow two major things. We follow momentum, which is easily measured through the initial construct of here is the negative switchover back here in July for the MACD, our early signal, our second early signal on August 1st, and then ultimately the number of equities that are in breakdown mode outpacing the number of equities that are in breakout mode. That gives you a negative momentum reading. That happened on the 10th. And what has this market been doing since? We went from 371 to 355 on the Qs. There is a relationship between the Qs and Bitcoin. And if we look at Bitcoin's chart over the last 5 days, what is it that you see? Well, a slow, steady decline in the last month, however. There is August 10th. There is the first signal. Here is the S&P 500 signal. This is what we are always worried about. Because when momentum breaks down, remember, this is usually built around the second thing that we watch, which is global liquidity. Global liquidity, the old Solomon Brothers definition. That is a measurement of central bank provisions, private sector supplies. Those are things that include good old, wholesale market flows and shadow banking provisions. And then the last part in there, of course, are cross-border inflows, and that can include euro dollar lending and cross-currency swaps. Now, this all sounds very complicated. This is stuff that used to be followed as Solomon Brothers in the 80s. It is still followed today, but Wall Street does not talk about it. People still talk about bulls and bears. And what I argue is you need to focus on liquidity and illiquidity. So when illiquidity comes, and that typically aligns with a momentum type event, all of a sudden what can occur is you have a lot of redemptions, a lot of sales, potential margin call coming in, and that has helped lead this cascade in Bitcoin lower. And if you want to look at the performance of Bitcoin over, let's say, the last 5 years, well, let's just look at last year alone. There was a negative momentum cycle in November, big sell-off for crypto. There was another big sell-off with that beginning of February that ultimately led into our banking crisis. Then there was an injection of capital by the central bank and Bitcoin went higher. We got moved lower, trickle. Central bank in China providing more liquidity. And then that's your peak. Your peak is July 13th, which coincided with when that sitting senator on the Senate Finance Committee decided that he was going to start hedging against the PSQ, which is the inverse ETF for the NASDAQ 100. So think of it this way. Not only did he call the top of the QQQ, he also called the top for Bitcoin. Bitcoin has pulled back from 31,471 since that date. And I would argue that there is likely going to continue to be a lot more pressure moving forward simply because of events that are transpiring over with China. You continue to watch what's going on in the Chinese and the European markets. A lot of pressure still in place, lots of concerns around deflation, and a lot of questions around the relationship between the yuan and the dollar moving forward. I will continue to break this down, but I will just let you know on this. If you were just simply reading postcards on August 10th of last week, you would have seen the NASDAQ reading went red. You would have sold or hedged your Bitcoin positions just as you would have done the same with your existing positions in any high-level tech stocks. In addition to that, we have been in the SQQQ, which is an inverse ETF to take on the performance, triple performance. Every 1% that the NASDAQ falls, we gain 3%, and we are in an inverse ETF for the Russell 2000 as well, the RWM. So pay attention. Momentum absolutely works in the crypto markets, and the reason for that, it is a pure risk asset. It is effectively a technology stock with zero earnings to show for it, so it will trade on the whims of global liquidity, and we are witnessing that happening once again.